Hi, today we're going to talk about ETFs and their transparency. Now, in the normal world of mutual funds, they did not have to disclose the holdings within the fund until the following quarter and with a 30-day lag. And so, what that means is that sometimes it's hard to see exactly what your mutual fund company is holding in the fund. For an exchange traded fund, most of them nowadays are disclosed every day what's in the ETF, exchange traded fund. And what that allows you to do is make sure that what they say they're buying and putting in the fund is what you're getting in your ETF. Now, this issue is good to a point, right? So a lot of times with mutual funds or investors, they have a secret sauce. They have certain criteria, certain ways they pick and choose the stocks or the bonds they're putting in there, and they don't want to disclose what their holdings are so that people can reproduce what they do in their performance. Now, there are starting to become ETFs available that are non-transparent, and the reason for that is to protect this intellectual property, which is totally understandable and totally a important thing. But it is important to know ETFs currently, most of them that track indexes or styles or sectors are completely transparent. You can see on a public website the day of what is actually in an exchange traded fund. So that's a significant difference between the way mutual funds work and the way exchange traded funds work, transparency. And so that can become very important. It can be important because what happens in the history of mutual funds, there's a thing called style drift. Now, what that means is that you have a mutual fund that says our style, the type of stocks we're going to buy are a large company growth stocks, right? So let's say large company growth is not doing well. We're in a recession and growth is not happening. Those stocks are going down. What might happen, and does happen from time to time, is the manager starts to buy other things to make sure his performance stays up. But you can't tell he's buying other things until you look at the holdings in the future for 3 or 4 months in advance. And by then it might be too late. It's not a huge issue, but it's something to be aware of as an intelligent investor that style drift happens. And it's something to guard against and watch for, depending on the manager and the style and the size of the fund you're using. So anyway, I hope that helps. That's a little bit about transparency and ETFs. Talk to you soon. Bye for now.